Hi traders, in this video we are going to be looking at the spinning top candlestick pattern. So this is a candlestick pattern where you're looking for a small candle body with long wicks. It can either be a bullish or a bearish candle. Let's see if we can find one on this 1 hour euro dollar chart. Usually you want to look for them in key areas, usually around support and resistance. Here's one here. This is a bearish spinning top candlestick pattern, and the reason this is a spinning top, well, for starters, it looks like a spinning top, and we have the small candle body with the long wicks either side. Ideally, you want the wicks to be longer than the body, and for the candle to close in the direction you're looking to trade. However, in saying that, if this was a bullish spinning top, as we're in a downtrend, you could still take it as an indication for a selling signal. You don't really want to take you definitely don't want to just enter short whenever you see one of these, or long whenever you see a bullish spinning top candlestick pattern. First of all, you want to do some additional analysis. So what we're going to do here is we're going to mark the most recent resistance level, which is up here, and we're going to mark the trend, which is clearly down. So we can see the price has reached a resistance point. The market is trending down. So now we're looking for the bearish spinning top candlestick pattern to confirm a potential entry point, or at least start looking for an entry into this downtrend. So what I would do now is I would mark off the support. So keeping in mind we're watching this area here, this particular spinning top candlestick pattern. Basically, the principle behind the spinning top is that there is a battle going on between the bulls and the bears to see who can win and which direction the market may be heading. The bodies tend to be small because it's usually a close battle, but this does mean that market can move quite significantly once either side takes control. So, as I said, we're looking to go short into this downtrend. We've marked our resistance trend line, and there is the support. There's the spinning top, and we could have considered taking our entry on the breakout of the support level here, following on from the spinning top. In fact, a good entry point would have been the low of the spinning top candlestick pattern. In this instance, we would have been able to capture, at the current price, we would have been up over 150 pips had we taken that trade there. Another good thing about this trade is if we then move this resistance level to more recent resistance following on from our entry here, this would have been a good area to place our stop loss, which would have only been 15 pips, which is a really reasonable stop loss for the 1 hour chart time frame, especially when you consider how many pips this trade has gone. It would have been giving you a really good risk to reward ratio. As I said, this is a 1 hour chart. I tend to find that candlestick patterns are more reliable on the higher chart time frames. There's also less noise, less time chart watching, and indicators also tend to be more reliable from my experience. And you can of course catch some big moves such as this one. Okay, and then as you took the entry and then price continued on down. Let me just fix up this trend line. Okay, so you would have seen price was continuing. This is where you took your initial entry based on the spinning top candlestick pattern. Then when there was this new level of resistance formed around here, you may have wanted to move your stop loss to break even, or even halfway down here to lock in some profit. And then let the trade continue to run. As it came down to this area here, you could have then moved your stop loss to just above this line of resistance that was formed. So you would have had the trade locked in for around 50 pips. Worst case scenario, had price turned against you, you could have even exited some of your position, say half of your position, banked some profit, and just sat back and watched this trend play out. Yeah, so that's really a simple entry example using the spinning top candlestick pattern. Let me just clear these lines for you. Mark it off. That one there. Let me just check that. You can also use indicators to help you if you prefer. For example, if we put the stochastic oscillator on the chart using the default settings 5, 3, and 3. On the stochastic oscillator, if you're not aware of this indicator, basically when this main line is below the signal line, it suggests a downtrend, vice versa for an uptrend. If price is in or around this area, anything above 80, the market can be overbought, which suggests that it's going to go down. And if it's around this area, 20 or below, it suggests that the market is oversold and it's going to go up. So following on from the spinning top candlestick pattern there, you could have checked the stochastic to say that agrees. Okay, main line is below signal line. We're above 50, so there's some momentum left in this move. It would have been extra confirmation to take the trade. We also have bearish divergence in the stochastic oscillator. Lower highs, again, suggesting the market is heading in a downward trajectory. That, along with the rejection of the resistance up here, you can just look at the chart and see that it's trending downwards there. You don't exactly need a ton of indicators or to clutter your charts. Just pure price action, support and resistance, candlestick patterns, divergence, and confirmation from an indicator. If you like to use indicators, and importantly to have good money management in place, because if there will be times when price action agrees, indicators agree, everything seems like the perfect trade set, but price will go against you. So I like to cut losing trades short and just wait for the next opportunity with a good risk to reward ratio to make back any losses and more. So yeah, this is a simple strategy that can be used on any trading instrument, any time frame. As I said, I find the higher chart time frames tend to be more reliable. Okay, well, thank you for watching the video. Hopefully you found something useful that you can implement within your own trading strategies. Please hit the like and subscribe for more. Thank you.